All right. Good day, everybody. Just waiting for people to get logged in here for a second. See, the number of participants is increasing, so we'll just give it a minute.
There it goes.
All right. Well, good day, everybody. My name is Alan Catlett. I'm the SVP of Operations at the IFA. It's my pleasure to welcome you to this webinar today. I won't say this afternoon because it could be morning for you. This webinar is brought to you by our friends at the Franchisor Forum. So the Franchisor Forum is open to all IFA Franchisor members. If you're interested in joining the Franchisor Forum, you can shoot me an email. It's acatlett, ACATLETT @franchise.org. And I'll be happy to add you to the mailing list and connect you with the Franchisor Forum leaders, including Stewart from Bloomin Blinds, founder and COO of Bloomin Blinds, who is also heading up the Finance Council for the Franchisor Forum. So welcome to this webinar on how to scale your brand with AI, sound strategies, and alternate funding solutions. It's my pleasure to introduce Stewart from Bloomin Blinds, Young Han from Bloomin Blinds, and UB from RevScale. And with that, I will turn it over to Chris to lead the rest of the conversation. Thank you.
Thank you, Alan. Appreciate everybody showing up and registering and logging in. Got almost 40 people on here, so that's exciting. I'm just serving as an access point to these two brains. These are two gentlemen that we met and have involved into our family from a financial expertise and a computer engineering. A lot of people have heard about some of the AI initiatives and stuff that we're doing and the software that we're building. UB's leading that up for us. Young is helping us scale this thing, control this rocket ship that we're on. So thank you for everyone being here. I'm serving as an access point just to these guys. My quick background in this window coverings industry for 23 years, small stint for about a dozen years as a firefighter paramedic previously. All my management leadership experience came from that. So if I miss a please or thank you, I apologize, but that's the point. This artificial intelligence and machine learning and robotic chase has kind of, my wife said it to me the other day, is I've got Elysium dreams on Hobbit budgets. So we're seeing what's out there in robotics and efficiencies and things like that. So one of Mom's first employees at Bloomin Blinds when we first started it, 2 kids, a lovely wife, and I'll get out of the way. Young is going to introduce himself, and then UB will give a quick background, and we'll get right to the content.
Thanks. Thanks, Chris, for having us here, and I really appreciate the opportunity to share some financial strategies and ways to grow and scale businesses, especially as it relates to franchisors that are starting to emerge and grow. And I know everyone needs money, and money moves all things. So excited to share what I know. My background is in operations and finance, and I'm currently the CFO at Bloomin Blinds. And I just joined Bloomin Blinds about a month ago, actually. So it's kind of fun. And I'm in office right now. So Chris is right behind me in the other room, which is kind of fun. I have 2 decades as an entrepreneur as well. So I've been building businesses in addition to working as a operations and finance inside of companies. I've worked at a lot of hyperscale companies, raised collectively over $200 million in venture capital across a wide variety of companies, including Phil's Coffee, launching 60 locations across the country, also doing insurance technology, a lot of deep data and financial technology, like Limelight Health. And then I've also worked at major retailers and brands like Apple and Starbucks that have taught me a lot of the skills that I know and understand, and we'll share with you a little bit today. I also have been an avid business builder and investor, and so I'm constantly looking for things to buy and invest in. And capital conservation and financial strategies has been a big part of like my growth and ability to scale. And so that's kind of what I do. And so I help companies scale and grow. And I'm excited to share with you some of the stuff that I'm working on that I think is very important for every business owner to know. And then lastly, just to kind of bring it home, I'm a dad of 2 young girls, and I am also technically a content creator because I host a podcast called The Girl Dad Show. So hopefully you guys can check it out. That's my little shameless plug from my podcast. And then I'll pass it over to UB to do an introduction before we jump into the content.
Nice to meet everyone. Thanks for today. Just wanted to talk a little bit about my background as well. I've been in the startup space and working with small businesses as well for a number of years now. Currently lead up RevScale and soon to be a CFE candidate. I've been on lots of panels about AI and really starting to focus on how to bring AI and make it more accessible to everyone, especially in the franchise world, without having to navigate the scary inner workings of how it actually is built and how it functions. Just giving a front end way to use it for those core tasks, especially in the financial realm, which we'll talk about today.
All right. So I'll jump us off to start, and I'm just going to share with you guys a couple of things that I just really want to make sure everyone's aware of as they think about scaling their franchise. The biggest thing is mindset, right? Before we get into the tactics, and I just want to share with you that the most important jump to starting to scale is really moving from this kind of cash basis mindset to strategic financial planning. And all that really means is really thinking about like what you're going to spend and how much you're going to make and planning for it. So you're not always looking at how much cash you have on hand, but you're actually starting to forecast to say how much revenue you're going to make, how accurate is that revenue coming in, what can you do to offset the tax liabilities, what can you do to mitigate taxes, what can you do to invest and get an expected ROI. And so a lot of these things that are important that we're going to talk about today and some of the tactics that you can utilize come from this mindset switch of like getting money, spending money, getting money, spending money, kind of on a cash basis that has probably helped many of us succeed and be successful, to more of a planning process. How can you start to forecast using the data that you have so that you can start to conserve cash? And I'm not necessarily saying it in the David Ramsey way of like putting budgets and buckets of money in little envelopes, which I think is also really good and powerful conservation methodology, but more in the sense of like tax mitigation and investments. So how do you allocate your capital to make it work better for you? This all starts with, first and foremost, conserving cash. And that really needs, at the core of it, legal entity structure. So my recommendation is that if you're not already into an S Corp, to be at an S Corp at a minimum, and at a certain scale and size, especially as an emerging franchisor, you should highly consider moving into a C Corp. As each one of these different entity structures provide a wide variety of legal protections, they also provide a dizzying array of tax deductions. So just to give you a baseline of what I'm talking about, we're going to talk about some of the things that are available for both today, but a C Corp has probably in the ballpark of 2,000 plus more deductions available for a business than an S Corp does. So there's a lot of ways to use your legal entity structure to help you conserve your cash better and use it for investments into your business to create more ROI. All right, so legal entity structure, understanding that is really important. And the next thing is, this is just like a handful. So you don't have to take notes. We're going to send you the entire deck, and we're also going to tell you how to like dig into each one of these things. But I just wanted to share with you just the dizzying array of ways that you guys can really focus on tax mitigation strategies, because one of the easiest ways to find capital for your business is just to find better deductions. And it's so funny because we traditionally look at like bank loans or borrowing money from our friends and family. And I'm not sure what you guys did to scale your businesses in the early days, but typically small businesses have a hard time getting access to capital. And more often than not, a lot of the capital is actually sitting in our business. We're just paying it in taxes because we don't know to ask for these things. And so my recommendation is when you get this deck, take a look at these 9 different tax deduction strategies. and start to ask your accountant about them and ask your CFO about them and see if they can learn more about them. And if they're not utilizing it, push them to learn about it and see if you're eligible for any of these tax deduction tactics, because they're incredibly powerful. They're completely legal. They're there for you. And one of the big ones that I feel that no one really ever uses that everyone really qualifies for is the R&D tax credits. Everyone does R&D. You just may not think about your business as R&D or research and development, because you think about it as like lab coats with like vials and chemistry and science. But the reality is we're all doing R&D. Every business is doing R&D. And so this is one of those classifications that's a no-brainer for most businesses that most people don't even know to take credits on.
All in how you document it.
It's exactly right. All how you document it and also how you read it. One of the key things that I do want to share, though, is not that it's an exhaustive list, right? It's just showing you that just simply, like, these are the things that I have found helping businesses scale, that most of these people don't use these 9 tactics. But what's really interesting about the AI and the evolution of these automation tools is not, then Yubi will talk about this more and how to like strategize and implement some of the things that I'm talking to you about. But what's really cool is you can also now just put in the IRS website and also like talk to it via ChatGPT, and you can have conversations and organic conversations and questions with it, asking what your business is eligible for based on information you feed it. You can have it ask you questions, but you can get a lot of the stuff that I know from decades of experience doing this, like pretty much at your fingertips. I'm not saying I'm not useful anymore, but I definitely know that AI makes it very, very equitable for you to have access to this information and at least know what to ask your accountant and CFO to look for. And I will say most accountants aren't going to push for this stuff because there's no incentive for them to do so. It's if they can keep it linear and binary, they create less work for themselves and less chance of poking the bear or getting audited. But the reality is they should be looking into this stuff, and it's your responsibility as a business owner to see if you're eligible and push them towards it. All right. And the main thing that I want you guys to take away from this before I get into these funding strategies is this message right here. The number one thing I like to talk to, especially emerging franchisors or brands that are trying to grow, is that you always want to find capital and get access to capital when you don't need it. It's like the bane of all business, right? It's like when you actually need the money, all the investors are gone and all the loans are gone. They're not there. But when you don't need it, they're emailing you 20 times a day to borrow money and give you money, right? And so I just want to make sure you fully understand this, because you may be in a good place right now or you may not be. But the reality is business will go up and down, and you want to make sure you understand this mindset that having access to capital is key. So whether that's opening a line of credit and not using it, or figuring out ways to do the math to figure out if that line of credit makes sense to hold, and you can offset the cost of that line by tax mitigation strategies, right? Like, so instead of paying 30% in business taxes, would you pay 10% on an interest loan that you can knock your profits down on? So there's some basic math that you can do to see if that makes sense for you to actually pull a loan when you don't need it to mitigate your tax liability. Simultaneously, it's also just good to do when you don't need it, because it's always good to have a rainy day fund. So as long as you have good financial discipline, it's a thing that I recommend all businesses do, and something that I'll be doing for Bloomin here very, very soon as well. All right, so let's go over some of these funding methods. I want to talk about the traditional real quick. I will be just highlighting this very quickly so you guys can just get a high-level overview. This shouldn't be too surprising for most. But most institutional banks have lines of credit and they have business credits, and I highly recommend you approach them first before you go down to the SBA. Your banks, as long as you have a good 3 years of business history, profitable business history, and tax returns, you'll be eligible for an institutional loan, which is much better terms than the mezzanine lenders or hard money lenders. And the SBA loan also offers a lot of great loans for various reasons: working capital, lines of credit, capital expenditure, hiring. There's a lot of different types of SBA loans that you can apply for as well. And then there's also something really interesting that I always try to recommend all businesses do, is that once they get to about 60% pay down on their loan, is just to call their lender or the financial warehouse that's housing that loan and ask them to refinance it. And I can't really see you guys, but I was going to ask you guys to raise your hand, but I won't do it. I'll just kind of assume that you guys don't do this, because when I talk to people, most people don't do this. But if you call your credit cards and your credit card company every 6 months and just put it on a timer to do it, and you ask them simply, hey, can you lower my interest rate on my credit card? They legally have to if there's something lower available. And people don't realize that you can do that. And all you're going to get is a no. But eventually you'll get a yes. And if you just do this, you can lower your credit card, personal credit cards, and your business credit cards interest rates over the course of 4 or 5 years. You'll get a couple knockdowns and you'll get your interest rate down and lower and lower and lower. This is no different than any debt. I mean, these guys are in the business of making money. And so if the prime rate changes, or the market's good, or they have a specific goal that they're trying to lean towards, or they want their funding to be more long term, or they want to renew it on a different term amounts, you just don't know what their internal goals are. So my recommendation is, just like a personal credit card, you call your loans on business and just put it on a timer and just email them, call them, and say, hey, am I eligible to refinance this? Because those extra couple points could equal hundreds of thousands of dollars in extra free cash flow. Moving on to the second section, which is some of the more alternative ways of getting access to capital. Crowdfunding. Crowdfunding is taking a really big storm over the last 10 years. There's been a lot of legislation and policy that's been approved to do Reg CF. And there's a lot of platforms now that do this. And there's a lot of AI being enabled on that to help you with diligence and get your paperwork across. There's a lot of tooling that's coming out for this space, and it's completely legalized now, and it's fantastic, especially for brands that are consumer facing. It's a really great avenue to raise money, because retail investors understand, things that they use. And so unlike a ephemeral AI tech company like UV, like a blinds company, was very explainable to a retail investor. And so crowdfunding becomes a very viable option, because they would understand it very easily and be more likely to put into it if they were able to understand the business. So something to consider there. There's also revenue-based financing. If you land a really big national deal or some sort of corporate contract that's very, very large, you can actually take that contract and get capital from it in advance. Obviously, you're paying a vig off the back end, but you can get that capital up front to fund your investments, your expansion, your CapEx, whatever it is that you're working on. There's multiple forms of this. There's factor loans, there's AR loans. There's all sorts of ways to break that loan down, and there's plenty of vehicles and companies that'll help you do that with different flavors and mediums. But there is a way to take large contracts and get the cash up front. So that's an interesting way to get cash in the door. And then another one that is pretty interesting is a lot of new lending platforms are popping up for businesses. And so kind of like Lending Tree, there's been a lot of peer-to-peer stuff in the last 15 or 20 years. In the last 5 years, there's been a lot more business lending platforms. So people can lend directly to businesses, which is very, very fascinating. And so one of the new platforms that I like to recommend is Bondside. It's pretty new, and they're venture-backed, pretty interesting company trying to democratize business lending, which is cool. And then something that could be very interesting, and I'm not sure if this is something that many of you guys do, or if you guys do at all, but actually being the bank for franchisees. So partnering with the bank, or if you have enough cash, actually being the bank and financing franchisees' loan to become a franchisee. So just like car dealers, make most of their money on the car loans because they become the bank or they partner with the bank. It's the same concept, right? So instead of outsourcing it to your preferred bank, or your regional banker, or your SBA lender, you recommend your franchisees to these places. You then could become the bank, creating a lot of liquidity for you as well as financial assets. And I'll answer questions as well too, but I'm just kind of going over some of the stuff topically. I know this is very dense stuff, and I could spend hours on each one of them, so I apologize, but let me keep moving forward, and then happy to take some questions after UB. So the other option is, and I'm not saying this is always right way to do it, but it is an interesting vehicle, right? is actually getting private investments. And I think that there are a lot of flavors to this as well. And from my understanding and research that I've done so far, private equity is a lot more prolific inside of franchising industry than any of these other vehicles. But I do want you guys to know that each one of these has different incentives and different goals for their money. And so it's really important to understand that if you want capital from outside, and you're open to diluting your company for that capital, just to consider the strategic value of that money. Money is important, but there's bad money and there's good money as it relates to private investments. So just really, really understand where you're getting that private capital from, what their incentives and motives are, and make sure that they align with you. And then there's hopefully some strategic value beyond the money that they're also providing. So something to consider here. Okay, just to bring us home here, because I could bore you to death with tax mitigation strategies for probably a week long. I'm going to kind of sum it up into the things that I want you guys to really remember from this thing. One is the most important thing, which is capital really helps you move and scale your business. So switch your mindset from cash basis to planning. If you can think about your money as a plan versus like, how much do I have in the bank and can I afford this, to how do I make enough to afford this, right? How do I control that cash and that ROI? And that really comes from operational efficiency. So in order to do that, you need to start operating in a much more rigorous fashion. And so that means building SOPs, that means building dashboards and trackers to see how your tactics are working. What's your CAC to LTV? What is your return on investment on different initiatives? Like all of these things that come with operational efficiency and rigor will give you the data that you need to more likely control how much money you're going to make, how much money that you can save through tax mitigation strategies, and where you can invest that capital instead. Second thing that you want to start doing immediately, and something I'm doing with Bloomin already, is collecting all these strategic partners. So the brothers here at Bloomin are like, hey, I get emails from these private equity guys all the time. Like, I just delete them. And I'm like, don't delete them. Send them to me. So I've been already fixing that from them and having them send it to me because, like I said, capital is there when you don't need it, and then they disappear when you need it. And so it's always good to just continually build these strategic partnerships with banks, these strategic partnerships with mezzanine lenders, hard money lenders, institutional lenders, angel investors, just everybody. And so it's really, really important to build those partnerships. And a simple way to handle this is simply just do a quarterly email. I just kind of call it like a relationship building newsletter. And it's just for a subset of people that, want to be a partner and want to give me money, and I don't need it. So I just kind of keep them engaged. And I just send them an email like every 3 months and say, here's some of the top level stats of where we're at, what we're doing. We still don't need capital, but if you're interested in staying on, continue. You don't have to do anything. We'll email you again in 3 months with updates on where we're at. If you want to get off this list, just email me back and I'll take you off the list. And I guarantee you, no one will they'll ask me to take off that list. And it just creates that relationship so that when you are ready to raise capital or need that money, you have a dizzying array of people that have been tracking with you and kind of see the business history and have that emotional connection with you. And then the last thing that I highly recommend everyone start to do is find someone that can start building out financial models. Financial modeling and analysis is one of the most game-changing things you could do to scale your business, because capital conservation is only one part of it. The actual important thing that you need to start doing is using that money appropriately and taking really good bets, and being okay with that risk because you know what to expect from that bet. And financial planning and forecasting really helps you make those bets in a very strategic and thoughtful way versus just kind of praying and spraying and doing things with money that you just hope works. And you need to do that too. I mean, business is just a set of risks, right? You're just taking a bunch of risks and hoping something sticks, and that's business at its core. But there are ways to do it more thoughtfully, and financial planning will give you that decision matrix that'll give you the visibility to know how fast it's working. Is it not working fast enough? Can you cut the losses halfway through? Like, all these more sophisticated business tactics can be done if you build a financial model. So those are the 3 things that I kind of want to make sure that you take away from this. And one thing, I'd love to throw this back at Chris a little bit, because something I'm working on with Chris here at Bloomin is he's very, very interested in this ESOP idea where you have employee stock option purchase programs for big corporations. And Chris was talking to me a little bit about how cool that would be if we had a franchise stock option program. And it's been really fun to dig into this and try to figure out how to build this for Bloomin. And I just wanted to share it with you guys because I think it's a really great conversation starter. And I know that Ellen was sharing with me that people have done this a couple decades ago, and with some good feedback. So we got to go dig in and research that. But I think it's very innovative. I think it's a very cool idea, and a lot of big corporations do this to really help people win with them. And it's a very interesting concept to align incentives with the franchisees, and it has the potential to create that liquidity as well. So it's also a really good option. Chris, do you want to add any color to this and kind of your desire for this, just fundamentally?
No, it's kind of the application of that idea. If you can go fast, you can go alone, and you can go far if you go together. And just kind of, if we're all growing a business together, us on the Zor side and all the Z's holding it up. I mean, it's as if nurses to the hospital, right? Doctors don't run the hospital. It's not the Zor. It's the Z's that are building the brand. We're just maintaining it. And so it's an ability for everybody to share in the benefit of the brand growth when it gets to that point of high interest. And that could be achieved through multiple different ways, from longevity to cash to whatever that looked like. But I think there should be a shared win for shared effort. So it's just
Nice.
a pursuit to find something in that space that works for everybody.
Awesome. Thanks, Chris. I love that. I love that sentiment. It's why I like you so much. Your heart is always in the right place. I love it. All right. So now you might be wondering, that's a lot of information. How do I even tackle this? And that's where I'm going to pass the baton to my good friend UB. There's a lot of ways that you can leverage AI to level the playing field. And I'm really excited for UB to share with you some of the stuff that's happening in the market technologically, because a lot of this stuff is just so dense and so sophisticated and complex. And, technology is really disrupting the equitability of it. It's democratizing access to it and the usability of it. So I'll pass it over to my co-host here, and UB, take it away.
All right, thanks, Young. And everyone, just again, Young covered a lot of ground here, and Chris also added on some really key parts to this, but naturally, this might sound very overwhelming. I wanted to talk about a couple different ways that AI can actually make managing the finances easier, and also uncovering some of these strategies or helping you execute it like a true co-pilot. So I just want to take a few minutes, or a couple seconds actually, just before that, to say that, look, you might be thinking AI is super complicated and techy. It is, but today's AI tools are designed to be user-friendly and efficient. So think of AI as your smart assistant, helping you with tasks that usually take a lot of time and effort. And the great news is that using these tools is easier than ever now. So even if you're not a tech expert, you can model your data, you can do a lot of the stuff that Young was talking about, and on the checklist that we'll send out afterwards as well, there are going to be some of these tasks that you say, well, great, I know the task now, but that sounds like a complicated thing to execute on. So we're going to talk about a couple different ways that you can achieve this. So one thing that I want to mention is about identifying the data source, right? So imagine you're running a business and juggling multiple receipts, bank statements, invoices. Every month you're spending hours sorting through these documents, and of course mistakes are easy to make. Maybe you don't have the ability to send a whole drive of these or even scan them, and you're already talking about hours of setup time. So basically, let's take a step back here, right? Using AI to automatically gather and organizing this financial data, expenses, revenues, tax info, all of this stuff. Think about where the info comes from: bank accounts, invoices, online payments. Find an easy to use AI tool. This could be ChatGPT. It could be Claude. There's a large number of them. We're happy to share some that we have no affiliation with. It's just tools that are out there and that are easy to use. So once you find and identify this tool or get recommended one, you can just connect these sources. And what I mean by that is you could literally download them onto your computer and then just drag them into the chat. Not a lot of people know that you can actually ask AI to help you analyze some of these documents and statements. Like Young was saying, I don't know about, well, we can't really see you, but I would have asked to raise your hand if you've ever sat there with a printout and a highlighter, like back old school, which Young basically is doing last week. But you know, sitting down with a statement or a set of statements, circling this, you know, and trying to identify. And you know, I know you have QuickBooks and all of this stuff, but if you're anything like me, sometimes even QuickBooks becomes too complicated for the non-CFO mindset folks. So basically, you can drag all of these files into an AI tool and just ask it questions. Treat it like your CFO, so that then when you go and actually meet with your CFO or someone that's helping you with the finances, you have some context that you can give them, or even ask it to organize all of these documents for you through some simple prompts. And again, we'll share what those are so that you could literally just copy and paste the prompts that we write along with your data into the tool of your choice and get the results that we're talking about. So one thing that I would say is definitely don't skirt on the subscription for some of these. It's nothing crazy, but even that $20 a month, privacy, I know, is a big component of AI, a concern. So when you sign up, let's just use ChatGPT just because it's, you know, soon becoming a quick household name. When you pay for ChatGPT, it actually gives you a setting that you can say, don't train your model off of my data. And this should give you some peace of mind, knowing that you're not dragging in your financial statements. I mean, when you use free tools out there, there are going to be some catch-alls that you have to pay attention to. But if you pay for that subscription, you'll be able to treat it like your private and personal CFO, and really other functions as well. But for the purpose of this, your CFO. And so this will allow you to essentially get this dashboard that you can chat with. And this will be able to show you all your financial data just from that drag and drop. So what does this do? I mean, this will save you hours and hours of manual work, reduce errors, and gives you a clear, up-to-date view of your finances. One thing that people don't really know or use, even if they know it, is you could do that from your computer. And then if you're on the road, if you're driving somewhere, if you're in a meeting, you can then access that same chat and those files essentially right from your phone. And you can continue to ask it questions once it has that raw data in there. So this gives you that clear, up-to-date view of your finances while you're on the go. So the next strategy that we spoke about is scenario planning. So let's take an example here that maybe you're familiar with. You know, you're considering a new marketing strategy or a big purchase for your brand, and you want to know how these changes might affect your finances. So using essentially the checklist, which again, you'll get afterwards, using elements from those checklists can be very daunting, saying, hey, plug it into your financial model or all of this stuff. But basically, again, take that AI tool that we just talked about, drag in the information related to your recent spendings, bank accounts, again, make sure you're in private mode. And then you can think about different what if situations. So imagine something that can answer every single what if situation to your context or in your context of your business. So what would happen if you invest in this new equipment, or what would happen if you change this pricing? Use these AI tools to help you model out as if you're talking to a room full of CFOs instead of just one. Then when you input these scenarios into the AI tool, you can actually simulate the results. A lot of people don't know that ChatGPT actually gives you a very, very simple way, and so do other models. But you know, anything that you drag CSV files or your statements into can actually give you clickable and interactive ways to talk with that data. So look at the results that the AI provides you. It will show you how each scenario might affect your finances. Keyword is might. It doesn't know everything about you. It just only knows what you tell it. And so the prompts that we will give you to use as well can help guide you in terms of like how to tell it the right amount of stuff about you without kind of sharing everything. But this will help you understand those potential impacts without having to do those complex calculations yourself and potentially making an error. So, making informed decisions quickly and using your data to predict these outcomes, that's one way to definitely take advantage of some of these strategies. Finally, let's talk about real-time monitoring and alerts. So let's use another scenario here. You're busy running the business. You can't always keep track of every detail. You need a way to stay on top of important metrics. Young mentioned some of those metrics. They might sound like Greek to you right now, but in the checklist, we'll kind of identify what some of them are. And again, it's kind of like that math teacher back in, let's say whenever, since there's a wide variety of age ranges on here, whenever you were in school last, even the math teachers or the statistics folks said you'll never have a calculator in your pocket at all times, right? That's kind of a running joke now because we all have very powerful calculators in our pocket. Similarly, think about this as like, oh, well, you can't stay on top and do complex calculations on the go. You actually can now. Being able to stay in tune with the key financial metrics that you want to monitor, maybe cash flow, expenses, revenue, you can actually use the same tool once you drag those files in. You don't have to do it each time, by the way. You can still be using the same chat window for all of this. That's called providing context. So now that you've given the AI model context, you're actually able to use these tools to track the metrics. Most tools will even help you by prompting you to say, okay, well, I told you this. A common question would also be, do you want me to show you how this X, Y, and Z can also come from this? And you can actually get lost in these rabbit holes where you just keep clicking, sure. And it keeps talking to you because it's going to know from the financial information what you're most likely to be interested in. So you can actually have some questions created for your CFO or financial planning meeting that you didn't have before because they might have just come up as you were using these tools. Because one of the scary parts about running a business, and I'm sure everyone's had their ups and downs and horror stories, but running the business is one thing. Knowing what is coming next or what is most likely to come next can be a massive let's call it a black hole in terms of your vision or visibility. So you may be thinking, okay, I'm doing everything right with my data from the past, but that data could also contain historical information that could help you say, hey, there's a big, let's say market correction. There's a big, event that happens, seasonal event every September, October, whatever it is. Your data can actually help you say, hey, by the way, in October of last year, something big happened where your expenses rose. This kind of stuff you can't afford to not have access to that information. So, if you are the smartest CFO in the room, like Young thinks he is, like Young is, you've got visibility on future events that even the most clairvoyant of us cannot tell sometimes. So again, take the AI tool, utilize it to track metrics like, hey, what's my cash flow? What's my, burn? What are my expenses going to be in the next month? Or even predict what they'll be. Use this as a tool to be able to alert you when cash flow drops between a certain level or there's a potential to save on taxes. So one example of that could be writing a prompt, which again, will give you these prompts. It'll have one saying, here are the 9 tax mitigation strategies that Young presented. Here's my data. Which one of these is most applicable? It could be as simple as that. So we're going to be sharing these with you because the point is, you can have that CFO on call. You can have this C-level executive. You can have AI be your 24/7 knowledge base because it has a very large context and memory context. And I know this might be causing a lot of questions, which we're happy to answer in the chat afterwards. But review this information, take action as it's needed. For more advanced users or those that are interested in this, again, we're happy to chat with you as well. No pitch here, just happy to help out. We have these automations that we can just kind of plug in for you or even just give to you. And this could be like running the same report every week and giving you a Monday morning outlook or a Friday week in review outlook of everything that happened. This kind of real-time monitoring keeps you informed about these key metrics, and ultimately you can act on these important changes before they escalate. So, just to summarize quickly, I talked about a couple of main things. Link your financial sources to an AI tool of your choice, centralized, up-to-date view. Use that AI then, once it has that context, for scenario planning. Test out different financial scenarios to see how changes might impact the business. And you can set up real-time monitoring and alerts, like tracking key metrics, getting alerts to stay ahead of potential issues or opportunities that could sink the business if not addressed early on. So if you have any questions or need further details, please feel free to ask. I think we've got about 20 minutes to do a Q&A, but we're here to help you make the most of these strategies and also augment your efforts with AI.
Thank you, Evie. We're going to also send this deck to you, and then we're going to have a guide, like Evie said. We'll send you a couple prompts, and then the checklist that we give all of our clients to fundraise. So if that's something that's interesting to you, you're going to get a bunch of assets delivered to you. Just if you want to use it, great. If not, no worries. But it's just really great tools that we use. So hopefully it helps you in your journey. We can go, I think, to Q&A. If Chris, do you mind hosting us on this, or I can't seem to open the Q&A section here.
Yeah, Lauren, if you could, you want to manage the chat. First one, any funding options for brand new businesses registered LLC a month ago? Brand new company. How's a company with no track record gonna raise capital?
Oh, question. Oh yeah, sure. That I mean, there's a multiple way of doing this. So if you're starting brand spanking new, with no history at all, my recommendation is private. Mostly because even with an SBA loan, you typically need to do some sort of business history or business plan, and it just becomes a lot harder. And the amount usually isn't as big. Private loans are good. This is like where you can do friends and family rounds or promissory notes from people that know you and believe in you and trust you. And obviously the SBA. SBA is a great place to start. There's a lot of these places. And then there are also some non-dilutive places too. I mean, this is another one I didn't put it on here when I probably should have, but AI can help a lot with this. It's just a very exhaustive process, but there are grants for starting businesses for every widgety do you could possibly think of. For people that are like 6 feet tall, people that live in Arkansas and have these two things, it's unbelievable how many grants there are for non-dilutive entrepreneurship. I just met a lady just yesterday. She's like, I'm specifically looking to deploy $30 million for women in business that have this much percentage. It's like literally, I'm like, that's a thing. And her job was to basically get this money out to these specific 6 criteria and to help people start businesses. So there's a lot of money that is there that's non-dilutive as well. You just have to do a lot of research, but AI should be able to help you do that a lot faster than it used to be in the past.
Kind of tease up the next question. How do we find and vet resources to help? And what are some of the interview questions to start with? And vetting someone like that would have access to that money.
Yeah. So
well, actually, Young, I just wanted to share one thing on this before you shared your version of it. But with this kind of stuff, what are some starting interview questions? What do we search for? These are all questions that should first be asked to your AI model. The AI tool that we talked about, once it has context about your business, it can help create all of this for you. So use that as your springboard. Don't feel like you're, cheating or cutting a corner by using it. This is out there for that exact reason, where let's say, a vendor that you're looking at working with says, okay, here's my experience and background. You could easily just add that to the context pool. So you could copy what they send you, add it in, and just be honest. Say, I'm thinking about hiring this person. Here's what they say they can do. What are some interview questions based off of what you know about me? And what it'll do is it will first check its knowledge base about what it knows about you. And then it will look at their experience, and then it will create those questions. And you tell it. If it only gives you 3 and you wanted 5, say, no, give me 2 more. This is very conversational, and it can be a really, really big asset to use this.
Yeah, and just I think that's great. Yeah, just to be more tactical, because I like to kind of take a financial approach to investments and investors, but if you're talking to an angel investor, which may be the case for the first question, the person who's asking the first question about like, hey, I don't have anything, I'm just starting out. You really want to align the story and the emotions, right? Typically, angel investors are much more emotional investors, and they're much more likely to not expect a return, and or also a return in any short time frame. And so I'm not saying that's the case, right? There's very shrewd angel investors, but if they're a professional angel investor and they do this regularly, they typically want to know the story, they want to know the founder, they want to know you care, they want to know you're a function expert. So you can really lean towards like asking them questions that'll help you suss out what type of investments they're looking for, what their thesis is, what their check sizes are, what they're looking to invest in, how you might provide them value, because they're just people doing their own money, right? And so when it comes to like interviewing them, those are the questions I would ask. Like, what are you interested in? Like, how can I help you deploy your capital better? And sometimes it's not your business, and sometimes it's not your story or the industry that you're in, but you may be able to help them. And what's interesting about being able to help an angel investor find the right deal flow for them through your network of other entrepreneurs or other business owners that are building something that might be a better fit is that now they'll think of you kindly and they may actually refer you to their angel friends, right? So there's someone that might be a bit better fit for you. So it's very similar to the business that you're used to doing and running. Investors are no different. It's all relationships. So, but as it relates to institutionals, I would definitely ask like, hey, what are the other investments you've made? What position do you sit in when you make that investment? How big is your check size? Do you like to lead? Do you like to follow on? What kind of questions do you need in your diligence process? Who's in the investment committee? Just a ton of these questions. And I didn't put that list together for you, so I'm happy to put a list of questions that I like to ask institutions so that you guys have that ready to go.
I think that
answers-
almost, yeah, and I think that actually ties into the other question as well, which is how to vet advisors to help us through this process, not necessarily the money people. So, very similarly, like anything, just because they're an advisor doesn't mean that they're above anyone else that's a vendor to you. So treat them with milestones, right? If they say they are experts in the following areas, great. Then like, here are the KPIs, the key performance indicators for working together. Here's what I would like to achieve. Can you do this? Can you help us do this? If they say, there's going to be a lot of people as you start a business. I can certainly attest to that, and I'm sure the other panelists can as well, that are going to line up with their hand out, and they're going to stick their hand out and say, "Oh, I can do this and I can do that." But you need, again, goes back to, I don't want to sound like a broken record, but you could ask that AI model that has context on your business about how you should set KPIs for an advisor that says they can do X, Y, and Z. It will give you one thing, 3 things, 10 things, whatever you want for each one of those tasks.
And if I could just piggyback, because I think that's a very tactical answer to that question, and I'll share the more qualitative version of that, which is treat it like any other interview. Make sure that like let's say you're hiring a key executive at your company, and you want to make sure they can do the job functionally. You want to make sure that you get references that they can get vouched for by someone that's trustworthy in the industry. They can point to things that they've done that's similar. And if you ask them the questions of like, how do they do it? How do they solve that problem? What was the hardest thing to solve that specific problem that you want advice on? They should have like data sets. They should have stories of failure and things like that. If they just kind of gloss over it at a high level, you may question the fact that they may not be able to provide the actual advice that you need. You're looking for someone, just like an executive interview, someone that's gone through the trenches and has failed in it. Because if they don't actually know it, then it's going to be hard for them to advise you on it.
I'll take a soapbox moment here and talk to the founders on the call. This is the Franchisor Forum. A lot of this conversation is revolved around equity for cash, trying to raise capital for a variety of different ways. For all of those that are like, how do I do this without getting rid of capital? If you're a franchisor, your responsibility is to preserve capital so you can maintain the brand and its operations. It's not to preserve your equity. So a lot of times we get in our own way that we refuse to acknowledge or consider some of these capital raise or opportunities that are out there, and through pride or arrogance, we run our brands into the ground. So I just want to caution all the founders on this call against, or being aware of that founder syndrome, and realizing the greater responsibility is to maintain the brand. And if you think that perspective or maintain that perspective, I think it'll be a lot easier to look at the future and scaling options, and all the different possibilities that could yield.
I love that, Chris, and it kind of is this answer to the next question that just popped up, like suggestions on getting past the fears. Like, if you know, as just kind of like a finance person that advises founders on this, like for a living, I don't actually have an answer. It's more questions like, well, what are your end goals? What are your personal goals? What do you want to be like when you grow up? You know, what does this look like for you in 20 years? Like, what do you want your kids to think about you in 20 years? Like, you got to ask yourself a lot of personal questions and make your business work for you. And then the fear goes away, because then it's just a transaction of commensurate value, leading towards an end goal and purpose. So it's kind of weird for a finance guy to ask you, like, tell me about what you want to be when you grow up. You know, and I get that's a weird question, but you can't get over that fear, because that fear is obviously telling you something about your personal goals and your aspirations for your business. And so you need to dig into that, and you kind of need to do a therapy session with your finance person, and really figure out what your personal goals are, so you can back into the business for that. Because equity and money, it's just math. It's a very, very quantitative thing. And so the fears are more qualitative and emotional and unjustified. So you need to figure that out before you do any kind of fundraising or any kind of debt financing or anything like that.
Yep. I was gonna add a very cliche statement, but I think it's relevant to the question and what Young said, which is, you know, owning a smaller piece of a watermelon is worth more than owning a larger piece of a grape. So sometimes you have to give up, you know, some pieces to grow, and you wouldn't have been able to grow into a larger company without giving up certain pieces to incentivize those others. Otherwise, you know, whether it's capital, whether it's advice, or a combination of them, if you are trying to gatekeep the equity essentially to yourself, or you know, being overly protective of it, then you could end up with something that was a lot smaller than what it could have grown into.
These are great questions.
That's an interesting one.
Very interesting one, yeah.
So many more questions after.
Yeah, I mean, these are very like personal opinion questions. I love it. It's like almost like a therapy session for all of us. I'm actually curious to hear all your guys' answers. I already have. So yes, I would. It just depends on the circumstance for me, right? So, and just to kind of go back to what UB was saying, like sometimes it's okay if you just want to be a grape. If that's what your goals are, just work with your finance person and they can reverse engineer that for you. So you have a really delicious grape. There's awesome grapes out there, and that's a good life. My end point is this: like, money is just a vehicle, guys. It's just a tool that you use to serve your personal goals. That's all it is. And as soon as you can realize that your business allows you more optionality to do that, the faster you can make this money work for you and your business work for you. So figure out who you are, figure out who you want to be when you grow up, and we can reverse engineer all the stuff backwards into it. But to answer that question, yes, I have done it, and I've done majority ownership. But the cool thing about fundraising, selling off equity, diluting, all this stuff is there's standards and there's templates, but there's a flavor for everything. Like, you just have to find someone that values it in a certain way that you do as well, and then they'll invest, and you can structure these deals however you want. You can give away 70% of the company in equity, but still say, I want all management power and final decisions. Like, I mean, like, what I'm trying to say is there's no laws that like force two parties to govern an investment. You can structure that deal however you want. So don't be so afraid of like this nomenclature of 50%, meaning, oh, now I don't own the majority of my company. Like, there's many ways that you can structure what ownership means to you, and kind of driving that vision, control, all those things. And you can still structure it if you can find the right investor to agree to it. So just want you guys to understand that this is not a binary process. This is more akin to a used car sale, right? Like we're like, there's a lot of flexibility in selling warranty, pricing, adding add-ons. Like you could do all sorts of stuff with financing your business.
I think we got just under the wire.
What
Another one
size is a
pop up.
good size to start talking to a finance architect? Is this best as a day one activity or something that you wait for? Well, I'll start and then UB will tell me I'm wrong because he probably hates that I'm right. But you can never start early enough. I I think you should do it from day one. Yes, and you can always limit the amount of time you spend with someone, right? So like I'm a fractional CFO, right? So like you could bring on someone like me for like an hour a month just to start the process and get a plan in place, because the worst thing that's going to happen is you have too much data and you have data to reference historically. That's literally the worst that's going to happen. And I actually think that this understanding of like building out your financial goals and plans that serve your story is actually more important than any AI tool that you could build or use.
Young's getting into some dangerous territory there. Two ways to look at it. Let's put it that way.
Yes, very much so, yeah.
All right. Thank you very much, Chris, Young, and UB. I think that pretty much wraps up our webinar for today. Ton of great information shared. Looking forward, you're going to share the deck out afterwards. So I know people will be diving into that and putting it apart. So I think that's it, everybody. That's a wrap, as they say. And thank you all so much for attending today. We really appreciate your continued support. Again, if you're interested in joining the Franchisor Forum, please drop me a line, acatlet@franchise.org, and I'll get you connected. Thanks very much.
That's good. Thanks,
Thanks,
everyone.
everybody. And you